Good morning, everyone. I'm delighted to address you today and delve into this ever-evolving subject of DeFi and digital assets and its potential implications on the broader economy and traditional financial sector, viewed through the lens of a global integrated risk assessment firm. My name is Rajeev Bamra. I'm responsible for overseeing strategy and operations for DeFi and digital assets at Moody's. In the next 20 minutes, I will strive to share my perspective on the DeFi landscape, its consequences, challenges, and prospects from the standpoint of conventional traditional institutions. Have you ever tried explaining DeFi to someone who has no clue what the crypto ecosystem is all about and what Bitcoin is about? It's like trying to teach algebra to a kid. It's very confusing. So let's try and address this fundamental question first. So what is DeFi? DeFi, is, simply speaking, is a new way of doing money things using innovative technologies like distributed ledger, for example, blockchains. Think of it as that cool kid on the block who leverages technology to provide financial services that are accessible to everyone without being controlled by a centralized authority. DeFi is somewhat analogous to modern-day alchemy. Instead of turning lead into gold, DeFi transforms cryptocurrencies into, well, more cryptocurrencies. And in this era of digital tokens, that's practically the same thing. Let's spend a minute on DeFi's composable nature or composability. It is great for developers who have the ability to mix and match financial components as if they were constructing with Lego bricks. It's like a magician's hat filled with surprises. The only difference, instead of pulling out a rabbit, they might stumble upon unforeseen vulnerabilities. It's akin to pulling a rabbit from your hat and discovering that the rabbit can access your bank account. Let's, for a minute, pivot our attention to the evolving role of DeFi, or let's say potential role of DeFi within the real economy, which is the topic at hand today that we'll be spending the next few minutes on. The potential for tokenization is virtually limitless, ranging from tangible assets like real estate and art to financial assets like bonds and stocks. I've heard whispers that my office coffee machine is going to get the token treatment. In recent months, DeFi projects have taken a bold step by incorporating real-world assets into their ecosystem. Their strategic move seeks to achieve multiple objectives, including broadening the range of financial products available within DeFi and diversifying their funding sources. DeFi's passion for tokenization is akin to a collector's dream, where every unique item gets a digital representation. This partnership is a boon for both traditional financial institutions and DeFi players, allowing them to diversify their funding, reduce costs, and broaden the pool of collateral. Through the sharing of credit and counterparty risks, both sectors can broaden their sources of financial backing and mitigate their overall risk exposure. Before we move on to the next slide or the next section, I want to delve a little bit on liquidity farming and liquidity mining and yield farming. I've been reading about this topic, and it's very fascinating, and I've been curious about this. If you've ever contemplated becoming a farmer but prefer to keep your hands clean, DeFi has got you covered. It's all about optimizing returns, and you don't even need overalls. Just grab your digital pitchfork and begin harvesting those yields. It's like a virtual treasure hunt where you dig for digital coins, except you won't get your hands dirty. Putting all jokes aside, if only we could discover a method to transform these digital treasures into tangible, real-world goods or services, we might be onto something truly remarkable. It's crucial to acknowledge that DeFi's current landscape is predominantly characterized by largely unsustainable business models and unbacked cryptocurrencies. To achieve broader adoption, there is an urgent need for stable digital currencies, and stable coins are currently the most widely used available form, offering potential value stability through their backing by reserve assets, for instance, fiat currencies. However, recent DPEG events where, for instance, few very large investors caused prominent stablecoins to deviate from their intended value, raise questions about their liquidity and long-term sustainability. As I previously pointed out, everything primarily revolves around crypto for crypto transactions, but for the DeFi ecosystem to expand, innovative forms of stable digital cash, such as CBDCs, tokenized deposits, and other digital assets like securities have emerged as potential alternatives. However, the future's preferred form of digital fuel or digital cash or digital settlement asset remains uncertain, and it's clear that investors desire stability and security. Stablecoins, despite recent challenges, are likely to play a significant role in shaping the future of digital money, at least in the near term. However, long-standing trust in central bank-issued and commercial bank money will help these remain the consistent instruments, even in a digital world. In the grand scheme, the digital finance ecosystem needs collective effort to establish blockchain infrastructure, a task accompanied by distinctive challenges. These include unresolved cybersecurity issues, the demand for interoperability, and standardization of practices across this expansive ecosystem. This undertaking essentially involves a careful balance between grassroots innovation, traditional financial wisdom, and regulatory guidance. This dynamic interplay between ecosystems holds the promise of bringing about significant transformations in the structure of financial markets, thus fostering cross-border compatibility. By identifying suitable applications, like the creation of unified ledgers as suggested by the Bank for International Settlements and the development of various regulated liability networks with robust safeguards, we can inspire trust while bridging the gap between the evolving DeFi ecosystem and the established financial world. Let's turn our attention to the subject of regulations, or the most important subject around need for guardrails in the DeFi ecosystem. As DeFi continues to evolve, regulatory oversight becomes increasingly important, creating a delicate balancing act, much like trying to maintain a Jenga tower on a tightrope. This dynamic interaction resembles an intricate dance with regulators on one side and DeFi advocates on the other, all working to establish the right harmony. The regulatory lens vis-a-vis digital finance is still not entirely apparent in terms of decentralized finance and decentralized autonomous organizations, two main aspects of the ecosystem that still lack institutional regulation. Decentralized protocols, for example, in the recently announced markets and crypto asset regulation, which was bound to be implemented sometime next year, does not address these topics either. From a regulatory standpoint, the path forward for DeFi remains uncertain, as it may take several years to develop and integrate comprehensive frameworks into distributed ledger technology systems. Effective collaboration and communication between DeFi, traditional finance, and regulatory authorities will prove indispensable for ensuring the sustainable growth of the digital financial landscape. The path that DeFi takes, particularly its impact on the real economy, relies on regulatory cooperation, prudent measures, and collaborative efforts between traditional finance and DeFi. The convergence of traditional and decentralized finance is no longer a hypothetical scenario. It's more like a real-life superhero team-up event. It brings both opportunities and risks with itself. As we venture deeper into the integrated world of DeFi, let's keep our minds open to collaboration, foster innovation, and more inclusive future, and engage in responsible experimentation, paving the way for a more inclusive future. And remember to keep your sense of humor intact. After all, in the world of DeFi, we need a little laughter to balance out those wild market swings. I look forward to the insightful discussions and panels throughout the day today. Thank you for your time and your attention. Let's keep those creative ideas coming. Thank you.